Joining us right now in the markets is Sylvia Jablonski, Defiance ETFs co-founder and CEO. And Sylvia, we saw these numbers yesterday a little hotter than expected, but the market's been taking it in stride. And you think it's basically game on from here?
I do. Good morning, Becky. I do. The print yesterday was a little bit hotter than expected, that 0.4 versus 0.3. Year over year, we're kind of not cooling to the point that we should be. We're not quite at that 3.7 expectation level. But I think if you break the numbers apart, services cooled off a little bit, goods went up. One of the nice numbers in the read was healthcare. And, we know that that's a huge part of PCE, which is the Fed's preferred reading. But overall, I just think the number is kind of par for the course in the path downward to deflation. And, the market wasn't highly surprised by what we saw. The market is, I think, more in line with the Fed, too, in terms of the dot plot and the 2 to 3 cuts versus the 6 to 7 that we were talking about earlier in the year. So there's some stability now.
You like some pretty expensive stocks. It seems like you think the leaders are going to continue to lead the way.
I think the leaders are going to continue to lead the way because I think that we're at the beginning of this AI innovation trend. And so when you see days like the first couple of days where, NVIDIA fell 10%, AMD fell back, those are good opportunities if you have FOMO and haven't gotten into semiconductors. But I also like cheaper ETFs that have, baskets that contain these names, like quantum computing types of products, cybersecurity types of ETFs that have the chips, the AI plays, everything that you essentially need to run AI and machine learning. So there's 2 ways to do it. Buy the expensive stocks if you'd like to, if you can afford it. If not, there are a lot of ETFs that give you exposure.
It's not just AI, though. You're also a big fan of Eli Lilly.
Yeah, so Eli Lilly, I think, the kind of obvious story there is the weight loss drug, Zepbound. You talked about that a little bit earlier this morning. But, they're also winning in Mounjaro. There's expected $10 billion of sales to come there. Metabolic diseases, diabetes research, Alzheimer's, cancer drug treatments. And talking about AI, these companies are now starting to implement AI to come out with better drug trials, better results, and things like this to get some of their drugs to market. So I think the obesity trend is really going to be the hot, kind of trade on that name for the year. But they just have a good diversified portfolio as well that I like.
Among the Magnificent Seven, you mentioned NVIDIA already that you like that, but Amazon is another top pick for you?
Yeah, so Amazon, I think it's another great portfolio of things like a Lilly, but in a different sector. So they're obviously playing in AI. They have the Anthropic investment. They're already, selling some of their services for generative AI to large companies. They have their cloud business. They have the e-commerce business. They remain a leader. They have some threats there, but they're still, really reducing costs there, running an efficient business. They're getting into pharma. We heard the Eli Lilly announcement this morning that they're going to distribute to them. I just think that they have so many, different opportunities in the hopper that, they're bound to perform. And they're one of the stocks that hasn't had this parabolic run, right? If you look at NVIDIA, AMD, the 90% year-to-date performance, I mean, Amazon's nowhere near that. So I think they'll have a little bit of room to run in AI.
Sylvia, thank you. We will see you again pretty soon.